Let's get right to the markets this morning. Joining us right now is Katie Koch. She is TCW Group's CEO. And Katie, you are the perfect person to have here this morning to just talk about the reaction in the markets based on everything that's happening right here in Davos. We did see a lot of activity. Krishna Guha is saying from Evercore that this is a sell America trade. What do you think about what you're seeing in the markets?
I think let's talk about what Europe's going to do and then broaden it to the global investment community.
Okay.
So the real concern that people have here is that Europe's going to retaliate with one of two tools. The anti-coercion, been talked about a lot, which would obviously hurt trade, and they happen to own 40% of the foreign ownership of U.S. bonds, which they could dump. So people are wondering whether they'll do that. I don't think that is going to happen because, A, it would be self-defeating, it would hurt them, and B, as been discussed broadly, there's not really a great liquid alternative with the quantum to redeploy that. Okay, now the broader global investment community, and let's think about it short and long term. From a short-term perspective, I do think that there is going to be pressure on the market. Yesterday was a sell USA day. It doesn't make a trend, but we saw the dollar go down, the bond market sell off, and equity markets not good. Now, if that continues, the administration, which I know Joe, I think, is talking to President Trump later today, can ask him about this, there will take an off-ramp like they did previously, because for a lot of reasons, but I think a main one would be U.S. voters care more about low rates than Arctic security. So that will happen. I think in the short term, there could be pressure, but there's an off-ramp. And what it will bring for sure is volatility. And as an active manager, that's great for us. Last year on this show, everyone was talking, you'll remember, about how U.S. was the best and it was U.S. preeminence. And we said, you know, we're not sure if that's true, but even if it is true, it's fully priced in. When underweight credit, 15% versus peers. Liberation Day got us the opportunity for volatility to get involved. And it's one of the reasons that most of our 80% of our strategies are 26th percentile or better. Longer term, I think we're going to see some quiet quitting of the U.S. bond market that I am worried about. And I'd love to talk more about that.
Meaning that people just don't show up to buy?
I think what is going to happen is that every asset owner that I'm talking to in Davos, and I'm talking to most of the large ones, they are looking to diversify away from the U.S. There's a push factor, a pull factor. The push factor is they are overexposed because the U.S. has outperformed for a long time. We're highly indebted. They're worried about currency weakness is obviously a problem. And they're worried about the policy uncertainty. So that's the push factor. The pull factor, which is super exciting, is that global diversification and the benefits of it are back on the table for the first time.
That's what I was saying. Where do they go?
So let's just take last night as an example, or yesterday. Everyone's talking about, oh, that must be sell the U.S. Maybe that's part of it. I know for a fact that the other part of it is that JGB sold off for a totally separate reason.
So Scott Bessent said, well, in fact, Scott Bessent said it had nothing to do with Greenland. It was totally...
I think that, I know that to be true because we did it at TCW. We were sellers of U.S. Treasuries, and we bought JGBs that are at record spreads. As you know, they widened 50 to 60 basis points. That's great buying for us. And we came in underweight, and we closed our underweight by 80%. I know other people were doing the same. And so I could make the argument to you that Japan, Europe, parts of emerging markets look more attractive than parts of the Treasury market, and I expect that investors will continue to look to diversify.
But that's just a valuation call.
It is, and but when I say quietly, like we all know, sophisticated investors, if you end up in a position that you want to work your way out of for whatever reason, you usually don't scream it from the rooftops, right? You're just going to quietly and methodically work your way out of that. And frankly, it was mentioned earlier, but we've actually... foreign investors have been diversifying for the last 10 years from the U.S. bond market. I just want to make this point because actually it's not this administration. It's been happening for a long time. I'm making the point it could accelerate. But at the volatility that you see in the long end of the curve that we have, it's higher now, that rate vol, than it has been previously, is because those foreign buyers who are price insensitive have stepped away and the investment community is more involved. And we also think there's going to be persistent higher rate vol.
I mean, this offer, if you're talking about, it could involve global security. It involves Greenland, but it would also take away these new tariffs that we're talking about. It would take away the possibility that the EU-U.S. trade deal falls apart, and the anti-coercion goes into effect. And selling the selling of the U.S. bonds. Those are four major things from one off-ramp. It could be. It could be very positive if something were, and we'll see what he says.
Positive response in the markets.
In the markets, and just, I think there'd be a collective sigh of relief that the world order from the last 70 years. Isn't
Selfishly, I'd like some volatility before we got a lot
want the volatility?
Yes,
All right, so you like that? You like these
Katie,
true
I like that
social
you speak
posts.
openly.
You like these,
I'm not saying that.
like
I
these
just
true
like
social-
the vol is something that we love as active managers we can work with, and I bringing global diversification back is a benefit to all investors,
Did you
and I'm
just
excited.
buy with both hands on Liberation Day? Was that a big
We
day
did.
for you?
And
You
actually,
did.
like the TCW is a value investor. We have a long history of stepping up and providing liquidity in both private and public markets when other people can or won't. And we put $6 to $7 billion to work the day after. And there was not a lot of buying happening.
No, it
Was
wasn't.
that
You're
a
great.
short-term bet or a long-term bet for you at that in that moment? Not where we are today,
Yeah.
but in that moment, as someone who likes vol and likes to trade,
Yeah.
It's an investment that's worked out if you held.
Well, yeah, so we don't like to trade,
Right.
but we were 15% underweight. That gave us the opportunity to close it, and it was supposed to be long-term, to answer your question, but then spreads went right back, and then we're now underweight again. So that's why I want the vols.
Right, so you can get back in again.
Yes, we want to get the chance to get back in and create value for our clients.
And you came in here. First thing you said, the Hoosiers were not the best team in Indiana. Wait, did you know ACB?
Actually,
crying
the
on the
first thing
set.
I said
You're
was we're
crying
not talking about Notre Dame football, which Notre Dame
Who's
is the best
team in Indiana?
The University of Notre Dame is the best university in the world
Did you know,
and the best football team.
Did you run
in the
into
country.
ACB? Did you have any Amy? No, ever.
And
No.
I'm very happy we have our coach too.
Yeah.
We signed
Right?
him up.
He could have left, and I mean,
He could do many things, but
Yes,
he
he
chose
could.
to stay at the best university in the country. So we're very happy about that.
Katie, I love you. I love that you speak so openly and are straightforward with things. We appreciate it.
Thank
It's
you.
such a pleasure to be
Nice to
on.
see you.
Thanks, guys.
Thanks,
Thanks.
Katie.